Hello party people, welcome back to my channel. In today's video, I'm going to be talking about FHA loans. Now, there is a myth that these are first-time homebuyer loans, but it is not just a first-time homebuyer loan. FHA stands for Federal Housing Administration Loan. So, before we get into this, there is a disclaimer. Real estate agents are not loan originators. We don't make the loans. So if you want to get the best possible information and the most specific details, speak to a mortgage broker or a loan originator or a loan officer. Real estate agents, the reason I'm doing this video is because a lot of you buyers will be using an FHA loan to purchase homes, and this is a really good place to start. So why do we call it why do people say it's a first-time home buyer loan? Oftentimes they'll say that because first-time home buyers use it a lot. But what it really stands for is Federal Housing Administration. That means that a government entity called the Federal Housing Administration insures the loan. So the government makes sure that if you go into default or can't make your payments, it's insured to your loan originators from the bank, the credit union, the mortgage lenders of any kind. Anyway, we're going to talk about a little bit of the details on how to know if you could qualify for a loan. Obviously, the first step is speak to a qualified mortgage broker or lender. But here's some basics. Number one, your down payment. For the most part, if you have a credit score above 580, you can qualify for the loan at 3.5% down. Okay, so you only have to bring 3.5% down. So if the home was $100,000, you would only have to have $3,500 or $3,500. In the event that your credit score is lower than 580 but above 500, you are going to have to put up 10%. So you'd have to put $10,000 towards a $100,000 home. That's still pretty good. So the first-time home buyers oftentimes will use it because the down payment is lower. The price to entry is lower. You don't have to spend as much to get into the home. That's a huge benefit of the FHA loan, probably one of the biggest benefits of the FHA loan. We already talked about credit score. You have to have a 580 or minimum, absolute minimum 500. Proof of income. You probably, as with most loans, you're going to want to have a history of work. Sometimes that'll be 2 years. Oftentimes loan officers want to see that you've been working, that you've been consistent, and that you have a monthly income coming in, and that you have had it for over 2 years or more. Although it's not always the same, that's kind of a general rule of thumb. Debt to income ratio, you're going to want to have a debt to income ratio of less than 43%. 43%. Debt to income ratio, I'm not going to cover in this video, but I might cover it in a future video. You can look up debt to income ratio and calculate it, or have a lender calculate it for you based off of your finances. The downside to an FHA loan. FHA loans aren't all sunshine and rainbows, although they are quite amazing. You have to pay private mortgage insurance. Because you're not coming with a 20% down payment, you're only coming with a 3.5% or a 10% down payment. That kind of sucks because you have to pay a monthly premium on a private mortgage insurance to make sure that, because you're more of a high risk borrower. So they're going to charge you more. You're going to have to pay insurance to make sure that if you default or if you go into foreclosure, that they get their money back. And then you're also going to have to pay it up front. You're going to have a upfront premium for private mortgage insurance. So that's going to be, I believe the number is 1.75% approximately of the purchase price. So if it's a $100,000 home, it would be $1,750 approximately. Next is owner occupy for 1 year. So if you are going to buy a home, I don't believe that there's a limit. I'll have to double check, but you could use the FHA loan, not just the first time you buy a home, but the second time you buy your home, the third time you buy your home, the fourth. The only thing is, if you're a serial investor, so I have a friend, and this friend bought a home, and a couple months from now, when he has hit the 1 year mark, wants to move into a new home. Can he do that? He has an FHA loan. The answer is yes, because you have to owner occupy the loan for at least a year before you can move on to your next home using another FHA loan. So as long as you live there, you're fine. If you say you're living there, but you aren't, that is a crime. It's called mortgage fraud, and you don't want to do it. If you have any questions, feel free to drop them in the comment section below. If you have any more in-depth questions, feel free to ask a certified mortgage lender in the state of Utah. If you're outside of the state of Utah, ask a mortgage lender in your city. You can find them at the bank. You can look them up online and just look for good reviews. So have a wonderful rest of your day. Bryce De La Ripa, have a good night.